The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 1st. Fantastic Friday, and of course, July 4th edition of the Trader's Edge. Romeo Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary day, an extraordinary weekend, an extraordinary July 4th celebration. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets, what the bulls and the bears, what the buyers and sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone, dial it in. Now's not too soon. 877-927-6648. That's our toll-free number, of course, 727-445-1044. You can get us there, too, as well. So let's go ahead and get this show kick-started on Fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 44 points. She's trading out at 17,974. S&P's up about 6 points, 2105. NASDAQ Composite up about 24 points at 48.66. Russell is up 2 points at 11.54. And that's where we're going to go ahead and begin our day, because we're going to go out to Mike in Ormond Beach, Florida, who wants to take a look at the IWM. Mike, thanks for calling. Thanks for holding. How are you doing this afternoon? Mike, do we have you?
Hello.
Yes. Hey, Mike, how are you this afternoon?
I'm fantastic. Hey, I'm thinking about putting on a small short on the IWM, maybe through the TWM or the one-to-one. What do you think?
Well, specifically with the IWM. So at this moment, so give me the time frame that you're looking at from a trade perspective. So you're saying you're looking at putting on a short. Is this a longer term trade? Is this a intraday trade? Kind of give me some feel here for what you're looking at.
Sure. Well, I think we're going to get some kind of a retracement. I'm not expecting Armageddon. Maybe a one-day trade or maybe a 3-day trade, something on the shorter term.
Sure. Okay.
My outlook is I think we're going to get a pullback, and then I think maybe looking at opportunities to go long for a longer intermediate period.
Okay, so let's thanks for providing us with that info. That way we have a frame of reference of what it is that you're looking at, and I'll try to skew the charts to support that action, as well as if it doesn't, and specifically what we will do is we will focus on the IWM. Now we'll do that by using a couple of different tools out here. First thing that we're going to do is just simply go take a look at the IWM. Since it's the end of the week out here, let's go take a look at it and see what it says to us. Let me get rid of a couple of things that were on this chart. So when we look at the IWM out here, right now it's trading at 115.13. It is tackled the swing point from June 6th. So June 6th is the swing point that it is traded into, the low of which is 115.69. Now that swing point, Mike, has 132 million shares. It is trading, price has rejected that level, at least right now, 115.69, because you're trading just simply, no, I take that back. Well, hold on. Wait, we're trading at, it's rejected that price from a weekly perspective. But when you come into a swing point with volume, even if you reject it, what that says, Mike, is that you're going to come back and test that level. So
Okay.
therefore, that would be said. Now we're just taking a look at the weekly chart out here. I don't think there was a holiday the week of June 6th. So from a volume standpoint, that would say price wants to get back up there. That doesn't preclude you from taking a trade. And we're just trying to get a weekly read from the IWM. What else do we know about the IWM from a weekly perspective? The swing point that also is in play is April 25th. And April 25th, that swing point had 130 million. And when price passed it, back on May 30th. It did it with 111 million, and then the following week, 132. So 132 is going against, and that's that little doji-style candle. That's a swing point that we currently traded into this week. 132 exceeds the volume from the week of April 25th. This actually, the IWM, has an AB equals CD to the upside, confirmed on a weekly basis. So I know that's not necessarily the news that you wanted to hear. Of course, you're saying, so I'm just giving you the longer-term outlook, which would support perhaps your longer-term statement that you're looking, in essence, to buy some type of pullback for a longer-term move. Now, that A to B equals CD pattern gives you a price projection all the way back to the highs from June of 2015 in the 129 level. That's the message of the weekly chart that I see it. If I look at our TAS boxes out here, and I look at just the weekly time frame, this is suggesting that the resistance zone out here for you to go ahead and perhaps take that short is on a spike up to 116.51. So you could put your order in ahead of time. And if you see a close above, I'd have to say if you were to get a close above that June 6th high of 118.64, and you would really need to use, well, again, we're looking at a weekly chart out here, but that's what the message is of these tools thus far. Any questions yet when we take a look at the weekly chart?
No, so as you're saying, at this point, you would wait until we spike up to 116 and then put it on?
I'm saying you would wait. I don't know that I don't know that I would take the short here on the on anything just yet. I'm considering it, but I'm just trying to give you the feedback of the daily time frame pattern inside the IWM. It's pushing into a swing point with volume. Now, what that it says is it's going to go back and test it. If it closes inside that swing point, which is 115.69, it says that price is going to go test the 118.64 level. Ideally, this week, you would have seen a test of that swing point and rejection on light volume. That's not what you have at the moment. Doesn't mean that it can't pull back. I'll give you a reason why it can pull back, but it'll have to wait. First, I'm going to just go over to the daily time frame, see what we know about the daily time frame, and that's this. We had the old Brexit showdown, in this case here, gap down, that took place on June 24th, and the volume there was 74 million shares. Now, that gap is your friend. It's your friend whether you're a buyer or seller because it gives you a line of resistance. The price point there is 115.73. There's no way that today's test is going to be on anything but lighter volume. So as long as the IWM might closes below 115.73, it certainly can support your short-term trade out here. It's a rejection of a resistance zone. It's the first rejection out there, but you kind of have a little bit of a mixed emotion as we speak inside of the IWM. We take a look at the daily versus the weekly. If I look at the daily profile boxes out here, this would say that the best shorting spot actually probably took place today because the top of its daily box is 116.04. It didn't get up there. It got to 115.95. Let's you and I would give it a little bit of a break. But the point of control level, which is where both sellers and buyers are comfortable with prices closer to resistance. So that supports your idea of taking a short. Can you hold on through this break?
Sure.
Okay, so we'll finish up taking a look at the IWM with Mike in Ormond Beach, Florida. You can give us a call too, folks, 877-927-6648. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Show, folks. Dow's up 35. S&P is up 5. We're on the phone with Mike in Ormond Beach. We're taking a look at the IWM. So, Mike, before we went to that break, we were taking a look at how the IWM has tested and rejected the gap down from the Brexit out here, you know, and which has got and the question becomes, do we really pay attention to that volume out there? You know, how real was the move? Was it an aberration? What was it? But it doesn't really matter the volume. What we know right now is that the swing point itself has volume of 30 million shares. You've only done 14 today. So it's even coming into that swing point on a daily basis, a little different than weekly with light volume. So I see what you are trying to do out there. And then the other thing that supports is the only other thing that I can see that supports the conclusion that you've got right now is the fact that the Russell large caps, the Russell 1000 is outperforming the Russell 2000. And this is an intraday calculation, so I don't know how it's going to pan out at the end of the day. But if you're watching us on TigerTV, the blue line on my chart is that ratio between the Russell 2000 versus 1000. When that ratio is moving higher, it tells us that the small caps are outperforming the large caps. You never maybe let me make this really clear. You never want to short the Russell 2000 when it's outperforming the small caps. You at least want to wait to see that ratio turn down. Well, therein lies what the conclusion that Mike has at this moment, because it's just turned down just slightly. But it's going to be an end-of-day level that's going to be important for you. So that's the only other thing. I would prefer to not trade the any of the ETFs out there based upon their signals and volume. I would rather look at what's going on inside of the futures contracts, look for patterns that are more consistent. That way we're, you know, and I don't have anything in those that say that a reversal is here. And here, I'll throw out this one other element. If the market closes up at its highs, And as long as the IWM doesn't close inside those swings that you and I were taking a look at, to me, that would support more of a putting on a short than if the market finishes off its highs or finishes where it's at about right now. Because if it finishes up towards its highs, the market will definitely achieve overbought status. And if it pulls back a little bit, it's actually more bullish out there. So that's my take as I see them. But what questions have now I created in your mind?
Well, now I'm thinking that, maybe I'll just sit on my hands and look for a good opportunity to go long. Because, from what you're saying, in the longer term, there's more evidence that we're in a bullish situation longer term. So I might just forget about the short idea and just
it's great. It's great what the market has done over the course of the last 4 trading sessions. I could be happier. Could be happier for my clients because we got in. We've been long, but quite frankly, my preference would have been for it to not have moved as fast and furious as it did. I can't do anything about it, and the reason is because we've gone from kind of a significant oversold condition to right now we're pretty close to a significant overbought condition. Doesn't mean that either of them can't expand themselves, but we are up towards resistance. I would rather see us up towards resistance and not be overbought. So I get your conclusion. I'm not just seeing I see where you're looking at an IWM. I don't know that it's there for the other indices. So is the IWM going to leave things lower is the question.
Okay. Well, Steve, thanks again for everything you do for us. You bring a lot of good tools to the table that, and it's great with all the different things you teach us. So you have a great holiday weekend. All
right, you too. Thanks so much for calling. That was Mike in Ormond Beach. And just to play off of the IWM, let's go get the thoughts from our man, Garo, in California. He's going to update us on the parabolic SAR and help us figure out what that is saying with regard to TZA. Garo, thanks for calling. Thanks for holding. How are you doing this morning? This morning for you.
Yes, sir. Thank you very much. How about you, sir?
I'm doing very well. Now, I think you would tell Mike that you've gotten a signal here yesterday of not he wanted to go short the TZA. Short the IW. One of those ways of doing it would be to go long the TZA. And what are you taking a look at the TZA? What's the parabolic SAR telling you at this stage?
The TZA, it's a reverse. It is a long. IWM is going to come down. The TZA is it changed the course at $35.85, $35.85. That is on the 30 minute.
And the 30-minute chart, okay.
Yeah, 30 minute and 15 minute is both confirmed that it's a reverse. But the 60 minute is not confirmed yet. The 60 minute is $36.58. If that price crosses $36.58, TZA is going to shoot up drastically, and the TNA, which is IWM, is gonna tank. Is gonna drop.
But first, it's got to get to. I know your calculation is slightly different than mine. Mine's 36.30 right now. Yours is 36.68. Again, is that what you said? 36.
No, 36.58. This number, 36.58, is going to change next hour. Now it is. Here is 10. Not here, but East Coast is 10:24. At 11:24, that number is going to change. It's not going to be 36.
No, I understand.
Yeah.
Now, Garo, just to make sure, folks, that Garo's referring to some very short-term trading patterns out here. A 60-minute chart he's looking at and a 30-minute chart. And what Mike and I were looking at were daily charts out here. And Garo, when Garo takes most of his trades out here, he's really he's in it for a, should we say, a short period of time? A few dollar profit, per share, right?
Yes, sir. You're absolutely right, Steve. On a daily chart, TCA is a bear. You're absolutely right. There are 2 dots at the very top, and stochastic is not at the bottom curving. Still, there is room for the stochastic to go lower. You're absolutely right. But on a short term, this is going to give about $1 for me today, from $35.85 all the way up. If you check the 30-minute chart, it will go up to its 21-day moving average.
About 36.59 right now.
Yes, sir.
Right?
Yes, sir.
Yeah.
It's going to go up there. I'm going to get out of that point. It's going to give me $1 on a 2,000 shares. It's $2,000. But what's going to happen after that? I'm going to see the 60-minute. If the 60-minute that candle crosses that dot, then for sure that is a confirmation. That is a confluence to me that this is going to go higher.
Yes, but would you hold that trade over the weekend?
Absolutely not.
Okay, that's what I thought. So I just wanted to make sure. I just wanted to make sure we were clear with anybody who was listening in. So the difference here, folks, is we've been taking apart the IWM, the Russell 2000, and now we've taken a look at it on multiple time frames. And what Garo shared with us is on the shorter term time frame what to take a look at. And the tools that he uses, and you can use them too. He's taking a look at the parabolic SAR. Those are the blue dots that show up on my screen. He's using the 21. He uses the 5-period exponential moving average. Is that correct? The 21-period exponential moving average, and then the 50 smooth or simple.
No, sir.
And then
all of them are simple.
All of them are simple.
Yeah, 5, 21, 50. That's what I use. 5, 21, 50, and 200. So,
all right.
So
I'm gonna make that change on my system as well. All right, my friend. Hey, Carol, thanks so much for calling, and have a happy July 4th.
You too, sir. Thank you so much.
Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Hey, that was two great calls, I thought, because it gave us the ability. That's why I ask the question often when somebody calls or when you send me an email and you're not providing me with the information as to the time frame that you're looking for, just some more information about the trade. It becomes very difficult to provide some accurate information, because when we took a look at it, because a daily chart's going to communicate something different than an intraday chart, such as a 30-minute or 60-minute or a weekly or a monthly. And so it's just so important for us to stay inside those time frames out here. Now, I will tell you something that just floored me yesterday. Just on my way, I think it was my way back from working out. My way back, by the way, but today's a good day. Today's a good Independence Day for me, because I've broken a key level. As many of you know, I went on I won't call it a diet. We'll definitely call it a lifestyle style change, but it certainly was a diet as well. And I had taken off like about 30 pounds-ish, and my body had just kind of stabilized. And it stabilized for like almost 3-4 weeks out there, which was really depressing. Really depressing out there. But I spoke with guys like Nico and just got some input from folks, did some more research on my own, and I've been able to break through that. Now I'm 41 pounds to the downside. So really just in the last week, I've been able to take off another 10 to 11 pounds out here. So pretty cool. So now I'm through another hurdle. It's just like the markets, right? It's like the markets that are plateauing, like we have, as we'll take a look at the Dow and others. Markets try to reach through that plateau. They can last for a long time out there. Once you bust through, though, right, those consolidation patterns, then you feel like you're off to the races. The market feels like it's off to the races. I know for me, it's been pretty. It's been really great, because when you take, I'm now running. And just go carry a 40-pound weight and try to run and see how much fun that actually is. It's not much fun. So getting that weight off has made things really nice out here. But as I was coming back from my workout, and the pretty intense workouts out there, somebody on CNBC during one of those shows, as a female person out here, and relatively followed, was talking about how they were just simply so confused that the markets were going up as the Dow Jones Utility Index was going up, and how uncommon that was. Just to show you how much, do not believe anything I say or anybody else does. Go back and do the work. Now, I prove it to you through charts, or at least I try to. And when I say prove it, I just try to say, let's put up the charts and let's see what the correlation is, whether it's there or whether it's not out here. And this is not a learned person. This is a person that was, I don't think intentionally, but just giving out just absolute inaccurate, bogus information out here. Because take a look at this happens to be the charts of the Dow on top and the utility index on the bottom. If we just simply come to the last major low, this is a daily chart, inside of the Dow, you'd go back to February 11, 2016. Now you tell me, we see that the Dow is going up in that time period. Is not the Dow Jones Utility Index going up as well out here? Of course, the answer is absolutely yes. So just really be careful with regard to the information that you are hearing on TV. I almost did. Thank goodness I wasn't driving a Tesla. Actually, that would have been fine with me. And that's a bad joke, actually. So I'm glad I didn't even say that out here. So even though I said it, but I didn't mean to really say it. I'm glad that I was driving something that was self-automated, because I would have run into something out there saying, what the heck are you looking at out there? In any event, okay, so let's come back to what the markets are doing. What are the markets? Let's take a look at this. So I mentioned just my own resistance when it comes to a weight loss program out here, and man, have I learned a lot in 4 months. This time, but I haven't had a smidgen of sugar for the last 2 solid weeks. I think that's probably the first time in my life. I mean, we're talking not even a smidgen. And I used to have cravings. Like, I don't know if you're the person who has cravings for, like, I love dark chocolate, but if you have cravings for, sugary type substances out there, I mean, literally where you feel like it's an addiction, then you know what I mean. And I've never, to my knowledge, been able to shake that. I have now shaken that. I mean, it's gone. It's not even an issue. Which is really, really, really cool. But anyways, back to plateaus or back to levels where it's hard to break through. That's exactly where our markets are if we go take a look at the futures contracts out here. Now, I prefer to use the futures contracts, as you know, to get our information. Number one, because what you and I are doing, we're in a market that operates 24 hours a day for the most part, right? It's kind of round the world. One world affects something else, and so it's all about price discovery. And if you just try to make your financial decisions or your trading decisions off of the ETFs, which basically they're on holiday, right? They take 2/3 of the day, more than 2/3 of the day, off from work. So do you want to spend your time in making decisions based on somebody who works the full day or somebody who only works a third or even less than a third of the day out there? Be careful about making your decisions on something that's not working as well for you or working as hard for you. So with regard to price discovery, levels of resistance, in my newsletter, I put in exactly what's going on and where I think the ETFs are trading into as of the night before. But the night before is irrelevant. That's why my newsletter doesn't focus on that. It's on there. It's on a page. It helps clients who are trading those on their own, levels to be watching. But they know that we don't give a rat's patootie to what took place as of last night. We want to know what's going on right here, right now, and where our price is likely to head to. Well, resistance, pièce de résistance, is exactly where the markets have traded into. If we take, and specifically, let's take a look at the ES Mini right now. The ES Mini, off of that low from earlier this week, got all that it could. I mean, this 4-day rate of change is pretty spectacular. I'll show you what a 4-day rate of change looked like. I'll have to switch to a different contract. We'll go back at it. But if we just simply take a look at our market profiles, and thank you, John Logan, for creating these profiles because they are such great, for all you people that are taking road trips. You remember when we were kids and not even kids, right? But when we were taking road trips, we would have to truck down to the AAA office, right? We go down to AAA, we get the triptych, and that's what we would use as a road map. Well, this is the triptych for the futures contracts, and the ES Mini basically hit resistance, like not to the tick out here, but close enough. The actual high today so far, 2100.75. The actual top, the actual top of the box is 2101. Missed it by, as Get Smart would say, right? Missed it by that much. Missed it by one little tick. If that's not hitting a resistance wall, then I don't know what is. In fact, when I saw that taking place, I sent a newsletter update to clients to let them know exactly what was going on inside the ES Mini, inside the Dow futures. Said, look, if you are a conservative trader, and you're not in this here for the longer term, then now or today is the time to go ahead and take profits off the long Dow trade. And that's because both the ES Mini and the Dow were both coming right into resistance. You have the Dow right here, it's a Dow futures contract, right into its weekly level, right into its brand new TAS daily out here. I mean, it is clear. So I understand Mike and Norman Beach. I understand his decision to say, hey, I might want to go ahead and go short out here. But there's other things that we have to consider as well. This is Steve Rhodes with TFNN. The question is, are these futures contracts going to be able to blast through their plateau? I know it can be done. I just did it from a weight perspective. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's see. We into? No, we're not into the last segment just yet. They're just trying to keep my pace going. Now, the chart that I put up on the screen, I mentioned something during the last segment because we said, hey, the rate of change or the move off of the low from this was the trading date is what was it, June 28th out here. Now I'm looking at the ES Mini again because we want this price discovery. We don't want to look at the S&P. Not that it won't give us a similar reading, but we just really want to go ahead and use all the data that we can. That way we're making intelligent decisions out here. So if we take a look at the rate of change, that basically is from a 4-day rate of change. So it looks back 4 days to see what the close was to figure out where is price right now. And if we take a look at that percentage, you can see the reading is up around 5.45 out here, okay? And that is a significant rate of change. Now, many might be out there and argue that when you have something like that, first somebody might say, you can't call this a blow off top because we're not above the highs out here, but somebody could say, make the case or try to say that, it's just a one-off. There's no way the market is going to hold. It's the end of the move, not the beginning of the move. And Lee Corso would say, not so fast. Quite frankly, if we go back and take a look at it, it's either or. The last time we saw this type of rate of change out here from a close to, and it didn't get up there, it got up to 5. We'll just say, we're just taking a look at readings of 5 or more out here. This happened to be right around February 18th. 2016. Now, February 18, 2016, it had not taken out its swing point from back here on February 1st. In fact, this will help me to answer a question from 2 days ago. Am I concerned about the light volume on the move up? And my answer is we go back and take a look at the chart of the S&P 500 or others. maybe we'll do that. What you'll find, you already know this, right? The market has gone up on light volume for so long that why should we can't just use that as our total view out here. But if we take a look at this rate of change from the close of 4 days ago versus where we're at, the last time that the ES Mini had done this was back here in February 18th. And, of course, the markets just went ahead and continued moving higher all the way. Well, they've continued moving higher, quite frankly, up until June 8th out there. So you're looking at about a 4-month stint. Now, that's the last time. The time before that, where we saw a rate of change similarly, where we had the markets moving down, that was during the last August. So what was that? Was that Ebola? Was that the Ebola scare? I can't remember if that was the Ebola. I think it might have been the Ebola scare out here. We saw a rate of change similarly back on October the 5th, 2015. The markets hadn't taken out a resistance zone. I don't even need to look at market profiles to know this swing point out here from September 17th was certainly a resistance area. What did the markets do? The markets went up for, it went up till November 3rd. So it was another month that it went higher out here in the markets. If we take a look at coming off that Ebola scare, what we did see was a failure. We saw the markets get up to a similar level out here. This was on August 28th out there. And then the markets pulled back just slightly. But they just pulled back slightly. So getting up with that kind of velocity, right, in this case here, didn't create for some kind of automatic failure or anything along those lines. How about we come back out here to the trading session of December 22nd, 2014. Markets moved up for a few days, consolidated, pulled back, really for probably a period of a month, right? A little over a month, 4 or 5 weeks out here, and then continued to move higher, right? If we take a look at October 21st, 2014, I think that was the Russian whole scenario, whatever else was going on out there. October 21st, that led to the market getting up. So this type of move that we've actually seen, and just by you and I going back and taking a look at it, what we're seeing here is evidence that having that type of move is a huge velocity to be able to break through resistance zones out here. I'm trying to go, I gotta take this thing back even further. I'm gonna try to go back here further for you. Let me pull this back just a ways. I don't know if that's at the 5 level or not. There's at the 5-ish level. So let me see. Where else can we go on this chart? Right back here to January 4th, 2013, right, to get up there, that velocity, and then move to the upside. So with regard to a reason to say to Mike and Norman Beach, or even my clients this morning, I think it was earlier this afternoon or late this morning when the market was getting to what potentially was a official overbought, just saying, you know what, we've made good profits. It seems like we've hit resistance levels. I don't know if we're going to get through. I really don't. But I'm not going to go ahead and close out the position. But if you are, if you're conservative in nature, look, folks, all of us take the actions that we take for one primary reason. It's called to meet our needs. Each of us have 6 primary needs out there. And the way that those are, the way that we prioritize means that we make different decisions out here. So I know that what you and I have in common, talk about July 4th and the importance of July 4th. Of course, there's questions whether it's really July 4th that should be celebrated as Independence Day, right? Some think it's July 2nd is my recollection, and some think it's August 2nd or August 4th. I can't recall. And by the way, there's a couple of the guys that became presidents that signed that died on July 4th. I don't know. That's kind of an interesting fun fact. But here's what I know about you. I know that when you listen on the show, I know there's one thing that each of us have in common here at the Tiger Financial News Network community, and that is growth. Each of us are about growth and contribution. Look at the callers that we have. Look at the folks that are inside the den. And those are some of the highest levels of values that you could actually have out here. So even though we haven't met, I know you, and you know me, because it's really all about growth. The 6. Somebody says, what are the 6? What are those 6 needs that each of us pursue? We either through certainty, right? Certainty is kind of the need for comfort, security. Imagine if you knew that every day of the week exactly what you ate, morning, noon, and night. Monday was this day, Wednesday was Prince Albert Getty Day. How do you think life would feel after a few months of that or a year of that? It would feel pretty boring. That's why the universe, God, whatever it is you want to refer to it as, gave us that need for just the opposite, the need for uncertainty. Now, do you think that somebody who has certainty is going to trade different than the person who has uncertainty? Yeah, the answer is absolutely. So what I don't know, even though I know things about you, even though we haven't met, and that would also pertain to clients out there, I really am trying to meet all their needs. That's really about the newsletter service, Mastering Probability. I don't really talk about it that much. I'm not here to sell you on it. But if you are a person that's looking for growth, well, it's a newsletter service that absolutely teaches you how to become independent for your own trading styles. And so, if you haven't tested it out, if you haven't subscribed to it, and yeah, it's changed over the years. Imagine, I think the first time that I did a show here at TFNN, I was certainly excited about it. But shoot, I was reading from scripts that I had stayed up the night before for a couple hours just trying to write, because I was like, how the heck am I going to fill an hour? And my trading skills back then versus my trading skills just right now, are you kidding me? So it's really all about growth. If we're not investing in ourselves, if we're not growing, we're what? We're dying. So I know that we are all about growth. And here's the other thing that I know about you. I know that you're here for great things. Not here at TFNN. I know in your life you are here for great things. And that means that you're not going to leave another man or woman behind. You're going to protect all of the women out there that you can. You're here for great things. And that is the cool thing about this network. So we kind of just get rid of all of the hogwash that's out there. We come back, we take a look at chart patterns out here. We see if we can find an edge. What does it mean? And then we make our decisions and we take a look at our thoughts from that. This velocity we've had over the last several days bodes well for the market. It doesn't bode poorly based on what you and I just looked at. Steve Rhodes with TFNN. We'll be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. And, geez, I almost forgot to do this. Yesterday, we had an email from Ken in Wyoming. He wanted me to take a look at ticker symbol LABU. I told him I would do that. Ken, if you're out there, my apology for not getting to it sooner. But let's go take a look at it. Now, the LABU is the Direction Daily S&P Biotech Bull 3X, 3 times. Now, that means I really can't go take a look at the IBB because the IBB is for the NASDAQ biotech sector. They might have similar holdings in some cases, but let's just take a look at this. Let's just look at what this is doing. And what I can't recall is, I'm assuming you were looking for a long position, Ken. I apologize. I don't remember. But let's just take a look at what this is doing, what it has done today. If we take a look at the LABU, and we just use some volume analysis down at swing points, one of the areas that we would focus on is the trading session from May 12th that had volume of 7.3 million shares. Price came down here with 5 million shares, tested it in essence and rejected it. That was your signal on June 27th as the market was going ahead and making a low as well. So too was ticker symbol LABU. Now it has moved higher. Price got inside its TAS daily profile. Those are the blue horizontal lines on my screen out here. And today, just like the markets, just like we looked at the equity futures contracts, the ES Mini, the Dow, the YM out there, they hit resistance level. Well, so too has LABU. When it got up to a high today of 30.78, the top of that box is 30.81. So if the question is now the time to buy? The answer is it's not. The time to buy on a retracement for this at this stage here, assuming that it does retrace, would probably be the bottom of that TAS market profile. I'd be looking for 27.53 to 28.47, as your buy levels out here. Now, there's an open window. There's a gap out here that it's going to have to contend with, and that's when it gets up to a price level of about 32.95 out here. So, you'd really like to be able to buy this on a pullback, knowing that that's going to be your first resistance level. If it can clear that, if it's moving up there with more volume, then that's certainly going to be a positive for you. Weekly profiles, they're so high up that we don't even have to worry about them as we speak right now. But you have had a successful test of the lows out here on lighter volume. That says if you can't bust them down, right? We know where we got this expression from. The one and only. And as Tommy would say, if you can't bust them down, it'll try to bust them up. So it does say that LABU should be targeting the swing point here from about June the 2nd in the 36-ish type range, 36 to 39 area out there. But at this stage, what we know of today is it hit a resistance level. So, Ken, I hope that helps you out. And Larry in Detroit sent me an email, but you forgot the attachment. So I can't comment about that during the show out there, but send me the attachment, and I'll be happy to take a look at it. So where are we? It really depends on the close out here today. What does TV mean? We know we're at resistance. We know that we've had just a huge move in the last 4 days. The type of momentum move that signals higher prices to come. Doesn't mean higher prices on Monday and Tuesday, but it does bode well, at least for the shorter term, intermediate term future. At least we'll call it for July, or a good portion of July out here. Oh, here, by the way, here's the volume inside the SPYs. Here's what we know, right, when we take a look at it, and really whether or not we have to pay close attention to the Brexit volume days out here. Let me come back on this chart. We know that we have these big moves to the downside, just as we did back here in August of 2015. These are the rectangular boxes, right? Scares out there, Ebola, or what have you. Huge volume on the way down. And all the volume on the way up, light volume moves. Volume on the way down, right? Light volume on the way up out here. So, markets can move higher on light volume. That's what we've got that's going on for sure right now. We're in the summertime out here. So let's just use a basket of tools to assist us on what the markets are doing. So, folks, have a happy 4th of July. Be safe out there. Protect everyone in your sight, even those that are not in your sight. And I'll look forward to seeing you on Terrific Tuesday. Take care, folks. Have a happy holiday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.